What's going on, traders? It's Ricky with TechBet Solutions. So for today's video, I think it's going to be a very helpful video, especially for those that are starting out and for those that are experienced as well. When trading penny stocks, you always want to jump into good stocks. But how do you identify a stock to be a good stock, right? That's the, in a sense, $1,000,000 question. That's the thing that we, dedicate so much time for and identifying potential. And in doing that, what's the best way or the most, in a sense, realistic way in doing that? Well, think about it when you're gonna go buy a car. You have all these ideas of what the car in your head needs to meet to be considered, in a sense, valuable car to you as an investor to sell for a profit. So just think about it as you being an investor or a car dealer, right? You wanna sell for a car for a profit, you need to make sure it turns on, you need to make sure that it's well maintained, you need to make sure that, all these different working parts are working, right? And are gonna be functioning, so when you try to sell it for a profit, you can. Now when it comes to trading, obviously it's gonna be a little bit different just because it's not the same exact market. But having these ideas and having these needs lists or this criteria that these stocks have to meet, that's not a bad idea, and that's what I want to create for you guys. So if you guys know anything about me, I want to make sure that I can make it as easy for you guys to understand. So let me know how I do in this video, explaining what it is that I think can I help you identify a penny stock or a stock or an investment to be a more successful stock. Pretty much what I want to start off with is setting up a criteria list. So for the members within TechBet Solutions, we're sitting a little bit over 12,400 members worldwide, and the thing that we do best is share best practices and share mistakes. We do have a large number of new members that aren't very experienced, and the thing that they ask most is either what I'm trading or what well-known traders within TechBet Solutions are trading. So in a sense, they're almost trying to mimic our trades, and that's the number one rule that we don't want to follow. We don't want to mimic anyone's trade, because if you know anything about investing, it's about the knowledge that you know as an investor that will lead to your success. If you mimic someone's trade and they're no longer there the following day, how are you going to be successful? How are you going to convert this into a career? You have to be very realistic, and you need to understand that yes, you might get lucky from time to time, but I can promise you, if you continue to just jump into stocks and hope for the best, that you're gonna have more red days than you will green days. And in doing that, I think having and creating a criteria list, meeting that criteria that every single penny stock you choose to invest in has to meet before it is considered a potential stock to invest in. It's kind of like, when a bank wants to qualify, in a sense, someone that, is asking for a $10,000 loan, they're not going to just be handing $10,000 to anyone. That's what makes them, in a sense, a good investor. They want to make sure that they end up making a return off of them with the interest that they're going to be charging, as well as that they're going to at least get their money back, right? So having like a stop loss. Same with every stock that you should be trading. You should have a set of criteria that every stock you should be trading meets before you make the judgment of jumping in. No matter if it's an opinion that someone gave you to jump into a stock, if it doesn't meet your criteria, then you are only, in a sense, making mistakes that will lead to failure and not success. These are just criteria that I came up from the top of my head that I like my penny stocks to meet before jumping in, and it's something that if you guys watch a majority of my videos, it's something that they all almost express. One of the first things is you want to make sure that it has good volume. And again, I'm not going to get into each exact criteria. We do have different videos within our helpful video playlist within TechBet Solutions that elaborates on each specific, in a sense, feature, indicator, as in like volume, RSI, and EMA. And those are essentially the ones that I'm going to be talking about. Volume is one of the first ones. If you want to be successful when it comes to trading, you need to make sure that what you're investing in, that you can get in and out at the right time. And you want to make sure that if you buy a stock, that you're not stuck in it because no one's willing to buy it, that you can get out when you want to, and that's the biggest thing, right? And for those that are trying to be more of momentum traders, volume is an essential, feature or indicator that you're going to need to identify when identifying, a successful or a potential profitable momentum stock. Now, the second thing that we want to talk about is RSI. If you guys don't know what that is, I did recently make a video about what RSI is and why it's so important. So you want to make sure that you're at 30 or below RSI, to make sure that it's more on the oversold side, to make sure that it's gonna slingshot you up to sell for a profit, right? EMA, identifying that it's going on an upward trend. You always want to make sure that you're averaging up or you're buying on an upward trend rather than buying on a downward trend. And the reason I say that is because you're buying a stock to sell for a higher price. So why would you buy a stock that's in a downward trend? Well, you shouldn't. And I feel like a lot of you might make the mistake, just like myself, and I've made multiple times, is you try to get in at the lowest point, and then it breaks that support, and then it rides back down, and then you're losing money. So again, the biggest thing is EMA helps you identify upward momentum, and with that, using the RSI, using the EMA, using the volume, you can use different indicators to identify a more profitable stock. All right, guys, and now once you have those certain criteria that your stock meets, right? Now you have the volume, the EMA, the RSI, and again, those are just examples. You should create whatever it is that you think that can identify or label your stock as a good buy. Set up a plan, right? And what I mean by that is identify support, identify resistance, where it bounces, where it peaks at, to identify a good buy point and a good sell point. And in doing that, using your indicator for volume, using your indicator for RSI, using your indicator of EMA, just think of it as in like, JNUG, right? JNUG is an ETF that we've been trading within TechBud Solutions, and one of the biggest things that we've been identifying as a trend for the past week is when it bounces at $5.60 and it has a resistance at $5.80. And RSI indicator supports that, meaning that every time that it's around that 560, support, then it shows that it's closer to the 30 RSI, and it shows that it's at or below, in a sense, the EMA. And then once it starts to rise, it crosses above EMA, and the volume starts to increase. And then once it gets to that 580 resistance point, the RSI gets closer to that 70 RSI. The EMA almost starts to cross, and then the candlesticks start going below the EMA, identifying that that's a good sell point. So again, setting up a plan, identifying support, resistance, knowing where you're buying, knowing where you're selling. And again, not every stock you choose to invest in will be successful, and sometimes it's going to be a consistent thing where you're buying in and you're stop lossing out continuously. Don't let that discourage you. Just know that it's way better to cut your losses at right below the support, or at 2.5%, or whatever you identify is the max amount that you want to lose, rather than riding it all the way down, losing 10, 15, 20% of your account, and then feeling discouraged of ever jumping into a stock again, because every penny stock you ride ends up going down. And that's truly not it. I think it's really just identifying and learning from your mistakes, identifying potential, and setting up a plan. And I think really this criteria is going to give you guys more confidence when choosing to invest in whatever it is that you guys choose to invest in when it comes to penny stocks or long-term holds as well. Now, I can't stress this enough, guys. You guys really need to learn to not be greedy. When locking in your profits, when you're at that, when that RSI is indicating that, it is overbought, meaning that you should sell. When the EMA is showing that it crossed, when all those different indicators are identifying that it's hit its peak, sell. Even if you lock in 1, 2, 3% profit, 10% profit, and the last stock you traded, right when you sold it shot up. Don't let previous, in a sense, just trades completely dictate what it is that you choose to do with the following. And the reason I can't stress this enough is because I can't talk about something that is even worse than being in the green, being 5%, 10% in the green, and not locking in that profit, and then being in the red, and then not wanting to sell because you're like, okay, well, I'll just let it come back to where it was. I know if you guys have been trading for a while, you guys might actually have experienced that, and that's probably one of the worst feelings. So I highly encourage you guys, when you use these different indicators, before even buying in, you should identify a resistance, and you should already have an idea of where you're going to be selling that's realistic. Don't be shooting for like 10, 15% if the stock hasn't even shown that potential within the past couple of days. And again, you're a day trader, so you have to make sure that within that day that it has that potential that's realistic. And all these indicators and all these, in a sense, planning that I'm talking about that can potentially lead to your success really comes down to you and how much you stick to it. The more that you break your rules, the more that it's gonna, in a sense, the more you start breaking these rules, the more that you're gonna see your account lose value. And what I mean by that is you're gonna stop being less consistent, and then you're gonna see your trades follow that specific trade. And it really comes down to how much you want it, how realistic you're willing to be when it comes to trading, and understanding that you don't need to be locking in 5, 20, 30%, every single time you guys trade. Realistically, especially with this $1,000 challenge, it only, expresses and shows how powerful compounding interest can be. When you're locking in 2.33% growth every single day, 3 days a week, right? Only 3 days out of a 5-day week, you lock in 2.33%. You do that 4 times out of a month, and then 12 times a year. You're going to be locking in from $1,000 to $20,000 within a 1-year period. I created an Excel sheet for you guys to be able to track your trades. That is available in the TechButt Solutions, Facebook platform. You simply click on files and it's going to be on attached files. It's like, I think, called growth plan, and pretty much what it allows you to do, and you can edit this again according to your own plan, but I created it for the $1,000 challenge, so you can adjust it according to what you're choosing to invest, how many times you want to trade, what your average profit per day trade you expect to be, and then it calculates how much you're actually going to be making realistically within the numbers that you inputted monthly and then yearly. And it does it by month, and then when you enter the amount that you've made that month, it tells you in comparison to what you made to what you should have made, if you're up or below, in a sense, that quota, right, for that so-called month. And I think this can really help you guys stay on track. So having criteria and understanding on how to identify a potential and profitable stock, and then having a plan every single time you guys trade to understand where you're buying, where you're selling, and where you're cutting your losses. And again, I can't stress that enough on how important that is. And although it sounds so simple, I can promise you, if you're a day trader, you're most likely going to make the mistake of breaking one of your rules, and then you're going to see a red day and then feel discouraged to never trade again. But it's those that overcome it, that understand the importance of planning, that are truly going to be successful when it comes to trading, because they know that you don't need to be making 100%, 50%, 20% every single time you trade. It's those that consistently lock in profit that will go the long way realistically. All right, and that's really just it, guys. So I hope you guys found this video helpful, and I hope you guys are excited. I'm actually gonna create a criteria sheet that I'm gonna be sharing with the members within TechButt Solutions. So again, if you want access to that, or want access to network and learn how to trade with over 12,300 experienced traders, and again, there's both new and beginning traders, and there's both well-known and experienced traders within TechButt Solutions. And again, it's a networking group, so we're here to share best practices and share mistakes in effort to promote growth. The link is provided for you down in the description. It is a free group that you can join. It'll take you to our Facebook platform, and then within that platform, you click on the top pinned post, and within that top pinned post, you'll have access to the group chat, and then within those group chats, that's where you can ask questions and learn what it is that we're trading, and learn from our best practices. But then that's also where we're going to be posting the Excel sheet, so you can track your trades, and as well as on Sunday, I'm going to post the criteria sheet, meaning that I'm just going to provide an example of what I want my penny stocks when I choose to invest to meet that criteria, so I can label them as a more profitable or potential stock. And it really comes down to, again, just as an investor, feeling more confident in trading, and this is truly going to build confidence, because now you have this criteria that not every stock is going to meet. So the night before, when you're performing your technical analysis, which you should be doing, you can go down the list of your stocks in your watch list and filter out stocks that are not there yet, right, that aren't at their prime, and then you can end up having 5 to 10 stocks, and then when the market opens during pre-market hours, there can be a different series of indicators that can help you identify the stocks that you're going to be trading that day, to give you a better judgment that, okay, look, I have 2 to 3 stocks to focus on today that meet all my criteria, and this is my plan for each one of them, where I'm buying, where I'm selling, where I'm cutting my losses, and that's it. And then you can sign it, you can agree to it, and what I mean by that is I want to make sure that you guys don't break that rule, that no matter what, no matter how much you believe in a stock, all this hype behind it, don't fall for it. Stick to your plan, and you as the investor created this plan. Yes, you can tweak it, but it shouldn't be tweaked after you set it up. It should be tweaked before, or you should have never actually jumped into that stock. So I hope you guys understand that, and that's why I'm stressing this so much, because I want to make sure that I filter out as many red days for you guys as I can, and I'm just talking based on my experience. So I hope you guys found this video helpful, and I'd love to be a part of your success. So again, the link is provided for you down below, and if you guys like this video, we'd appreciate the thumbs up, and if you guys haven't done so already, feel free to subscribe. We upload helpful videos Monday through Friday every single day, right, at 5:30 Mountain Standard Time. We're here to be a part of your success, and like always, we hope to end the year on a green note. Take care, guys.
Baby, don't you let it go to waste. We can put 'em all to shame.